Hey everyone, and welcome back. You know how we love to roll up our sleeves and really dig deep into a topic?
Yeah, we get kind of geeky about it, don't we?
Well, today's deep dive is no exception, and we're tackling something I know a lot of you have been eager to learn more about: active investing.
Right. So passive investing has had kind of a moment lately, right?
Yeah, index funds and ETFs, those are all the rage.
Yep.
Super easy, pretty hands-off. But what if you want to be more involved with your investments?
What if you want to potentially outperform the market? That's where active investing comes into play.
Yeah, totally. So instead of just, mirroring the market, active investing is about, trying to beat it.
Exactly. And for today's deep dive, we're going to break down what exactly active investing is.
We're going to, demystify it. Look at the strategies involved.
Talk about the risks, the potential rewards, and we'll help you figure out if active investing might be right for you.
All right, let's jump right in. So first things first, what actually is active investing?
Okay, so active investing is all about trying to achieve what we call alpha.
Alpha.
Yeah, it's a fancy term, but it basically means generating returns that are higher than a specific benchmark.
So, beating the market.
Exactly. Think of it like the S&P 500.
Right, the S&P 500.
A collection of 500 of the biggest U.S. companies. It's often used as a measuring stick for the overall market, right?
Yeah.
So active investors, they're aiming to do better than that.
To get higher returns.
Exactly. And they do that by, well, being active.
Okay, so how do they actually, be active? What does that even mean?
It's not just about, buying and selling stocks randomly.
Because, that sounds kind of risky.
It definitely can be risky if you don't know what you're doing, but it's more about making informed decisions.
Informed decisions based on what?
Research, analysis, understanding market trends.
Okay, so it's like being a detective almost.
In a way, yeah. It's about digging deep, looking for clues, and trying to make smart investment choices.
I like that. So, it's not just throwing darts at a stock board.
Definitely not. It's way more strategic than that.
All right, so can you break down, the key elements of active investing?
Sure. So there are kind of three core components to it.
Okay.
The first one is investment selection. This is where, you're carefully picking individual stocks or bonds.
So it's not just about, oh, I like that company's product, so I'm going to buy their stock.
Right. You have to look way deeper.
What kinds of things are you looking at?
A lot. You're looking at a company's financial statements.
Ooh, exciting.
Yeah. Things like their earnings reports, their debt levels, their cash flow.
Okay.
And then you're also, looking at their performance, how they're doing compared to their competitors.
So you're really, getting into the nitty-gritty.
Yeah, you really are. And you're also looking at the industry they're in. Is it a growing industry?
Is it an industry of the future?
Yeah. Is it an industry that's on its way out?
Right.
You're considering all of that when you're selecting investments.
So it's kind of like a detective again, but a financial detective.
Exactly.
Okay, so that's investment selection. What's the next component?
The next one is market timing.
Oh, yeah, market timing.
Yeah.
I've heard of that. That's the art of buying low and selling high, right?
Yeah, yes, exactly. Trying to time the market. And it's tricky.
Yeah, I bet.
It's about trying to predict when to enter and exit the market to, maximize your returns.
But isn't that, really hard?
It can be. You're trying to anticipate market trends, economic indicators, sometimes even global events.
So, you'd have to be a fortune teller or something.
You kind of do, or, well, at least be really good at reading the tea leaves.
Gotcha. Okay, so investment selection and market timing. What's the third piece of the puzzle?
The third component is portfolio management.
Portfolio management.
Yeah, and this is where you're actually, managing your investments.
So once you've, picked your stocks, timed the market, you got to do something with them.
You do. You're monitoring their performance. You're making adjustments based on, new information that comes out.
Okay.
Changing market conditions.
So it's not just a set it and forget it kind of thing.
Nope.
Yeah.
Active investing requires, active management.
You got 10-tier investments.
Exactly. Some people compare it to gardening.
Oh, that's a good analogy.
Yeah, you're constantly, weeding, watering, making sure things are growing properly.
But instead of plants, it's your portfolio.
Exactly.
Okay, this is all making a lot more sense now. So with all this effort you have to put in, there's got to be some serious potential upside, right?
Right. The potential for higher returns, that alpha we were talking about, that's definitely a major draw for active investors.
They want to beat the market.
Exactly. But It's important to remember that, like anything in life, there are also risks involved.
Yeah, nothing's a sure thing.
Right. And with active investing, you have the potential to, outperform the market,
That's the goal.
but you also have the potential to underperform.
Oh, right. So you could actually do worse than if you just passively invested in an index fund.
Unfortunately, yeah. That's why it's crucial to, do your research, understand your risk tolerance, and have a sound strategy in place.
And maybe talk to a financial advisor.
That's always a good idea, especially if you're new to investing.
So it sounds like active investing can be pretty time consuming and complex. Is it even worth it for the average person?
That's a great question. And honestly, there's no one-size-fits-all answer.
5 years?
It really depends on, your individual circumstances, your goals, your personality even.
If you're someone who loves to research and analyze, maybe active investing is right up your alley.
Right. But if you're more of a, set it and forget it kind of person, then passive investing might be a better fit.
Yeah, if you don't have the time or the inclination to really dig in, active investing might be more trouble than it's worth. Okay, so before we wrap things up, are there any key takeaways or things people should consider if they're thinking about dipping their toes into active investing?
Yeah, I think so. So first and foremost, ask yourself, do I really have the time for this?
Because it sounds like it takes a lot of time.
It can. Active investing requires dedication. You have to stay informed.
Keep up with the market.
Research companies. Monitor your investments. It's not a passive endeavor.
All right, so time commitment, check. What else?
Second, you got to be honest with yourself about your level of expertise.
Right. Do you actually know what you're doing?
Exactly. And if you don't, are you willing to put in the effort to learn?
Yeah, there's so much information out there these days.
There is. Books, online courses, financial websites, so much to learn from.
All right, so time commitment, expertise, anything else?
Yeah, and this one's huge. Behavioral biases.
Behavioral biases.
Yeah, are you prone to making emotional decisions?
Letting fear or greed cloud your judgment.
Exactly. Active investing requires discipline.
You got to be able to stick to your strategy even when things get a little rocky.
Right. Because the market can be volatile.
It definitely has its ups and downs.
And if you're, constantly reacting emotionally, you could end up making some costly mistakes.
All right, so be aware of your own behavioral biases. What about, evaluating performance? How do you know if you're actually doing a good job?
That's another great question. So you can't just judge your performance based on, one good year or one bad year.
Because it's the market goes up and down.
It does. You need to look at your performance over the long term.
Okay, so it's a marathon, not a sprint.
Exactly. And you should be comparing your returns to a relevant benchmark.
Like the S&P 500.
Exactly. That'll give you a better sense of whether you're actually outperforming the market or not.
Because, if you're putting in all this effort, you want to make sure it's actually paying off, right?
Right. And you should also be looking at risk-adjusted returns.
Risk-adjusted returns. That sounds complicated.
It's not as complicated as it sounds. Basically, it means that higher returns aren't always better if they come with a ton of risk.
So, you could have an investment that's, super volatile, but in the long run, it might not actually be worth it.
Yeah, exactly. You want to find a balance between risk and reward that you're comfortable with.
So it's all about, knowing yourself.
Yeah.
Knowing your goals. And knowing your limits.
Exactly.
Man, active investing is way more nuanced than I thought.
It definitely is. It's not just about picking stocks and hoping for the best. It's a whole process.
It's about research, analysis, strategy, and a lot of self-awareness.
It really is.
Well, I think this has been a super helpful deep dive. Thanks for breaking it all down for us.
You're welcome. It was great chatting with you about it.
So for all of you listening out there, hopefully this has given you a better understanding of what active investing is all about.
Right. And hopefully we've given you some things to think about.
Yeah, whether or not active investing might be right for you.
Because it's not for everyone, but for some people, it could be a great way to, take control of their investments and potentially achieve their financial goals.
So as always, do your own research, talk to a financial advisor if you need to, and make the decision that's best for you.
That's great advice.
And until next time, keep on learning, keep on growing, and keep on diving deep.
See you next time.
Bye.